This is all about Bitcoin. It's a show dedicated to all things questions and markets related to Bitcoin. That's little b for the currency and big B for the network. Happy Friday, everyone. I'm your host, Lawrence Lewitson, filling in for Christine Lee. And so let's take a look at the price of Bitcoin, checking in on Bitcoin. The CoinDesk Bitcoin XBX index is currently trading at 21,300 and about 83 or so. Little under 0.5% down in the past hour or so. But unfortunately, for all those who are long, it's down about 8%. So that's a brutal 24 hours for everybody. Now let's zoom out and look at the bigger picture of Bitcoin on today's chart of the day.
The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
This is a very ugly chart. In fact, it shows Bitcoin hitting every branch of the ugly tree as it falls down over a course of 6 days. Bitcoin extended its 6-day losing streak, plunging down to 21,300 recently. And the early morning drop, and this is just the past few hours, was Bitcoin's biggest in 2 months. Go back and you'll see in June, we had a big sell-off. Guess what? It happened as a series of sell-offs over the day. And after that dramatic drop in Bitcoin in June, it met resistance of about 22,000. And, now we're trying to see if we can even hold support at that level. It doesn't look good. It doesn't look good. We're well below it now. So, but you know what does look good? Our panel. Joining me now to discuss Bitcoin price and other Bitcoin news is our Week in Review panel. It's CoinDesk Managing Editor of Technology, Christy Harkin, in Toronto, on the other side of Lake Ontario. Good morning, good afternoon rather. And Managing Editor of Markets, Brad Cowan, in Austin, Texas. Welcome, both of you.
Thanks, Lawrence. Thanks for the compliment. I like the contrast between your description of us and the description of the chart.
Hey, it's a Friday afternoon. People want something bright to go into the weekend, especially it lasts a couple of weekends of August. But yeah, Brad, you brought this chart to everyone's attention here. So, what's your take on the price action shown in the chart, and also? It seems that the big issue here in the markets right now is this fear that about inflation and what's going to be done with it. That still persists, correct?
Oh, for sure. The big picture, kind of stepping back, if you look at that chart, we had this rally. Obviously, we had this huge crash. You can see over on the left of that chart in May and June, and it took us down into the teens, and that was kind of the beginning of the crypto winter, right? And then we were sort of in crypto winter for a while, and then kind of in July and beginning of August, we saw this comeback, and we made it all the way up to 25,000. And what we're seeing here is the market could not hold that. And, I think to your point, Lawrence, Bitcoin, there was some maybe speculation that there might be some decoupling between Bitcoin and macro. And what we're seeing today is, very much still tied at the hip. Bitcoin's still trading more like a risky asset, than an inflation hedge. We're seeing more signs of inflation around the world, and it's increasing speculation that the central banks are just going to have to keep their foot on the brake. And so you're seeing a big sell-off today.
Yeah, all those people on Twitter who promised me that Bitcoin was going to be an inflation hedge over the years. It's not quite showing that, is that? Christy, meanwhile, seems like the only way miners make money is by not mining.
Well, it seems to have helped to a certain extent when it, at least for Riot blockchain, they managed to get a whole bunch of money in credits for not mining, for turning off their equipment in Texas, which sounds a little counterintuitive. But according to this, we were sort of doing some back of the napkin, and by we I mean other people on our editorial team were doing some back of the napkin calculations, and it seems that they got something like 9.5 million in power credits, which we know about, but that equates approximately to something like 439 Bitcoins, computed using the July 22 average BTC price of $21,634. So they would have had to mine 439 Bitcoins to make that much. And that's actually quite a lot of Bitcoin for them to have mined. So they probably made more money in the power credits than they would have if they kept mining.
Hear that, miners? Yeah. Just go to Texas and do nothing. Now, we are, I think, contractually obliged to mention Tornado Cash this week, all of us, and what's going on right now with Tornado Cash and what has happened this past week and its repercussions. Who wants to take a bite at that one first?
Oh, I'm all over that one. Yeah. Okay, it's not Bitcoin. Let's just start off by saying that Tornado Cash is not Bitcoin. Tornado Cash primarily deals with Ethereum-based, or maybe exclusively works with Ethereum-based tokens. So this is not a Bitcoin thing. However, it would be very, very foolish for Bitcoiners to not be paying attention to it and to think that we're all in the clear, because heck no, we're not. This was a decentralized mixing platform, and mixers are generally used to obfuscate the path of your coins, the transactions prior to what you've been doing, for the purpose of privacy, maintaining privacy. And they do that by mixing your coins with a bunch of other coins and other transactions, and it all spills out on the other end, and it's all harder to read. Now, the thing is, and again, it's a decentralized platform, and it was the code itself that was sanctioned, and the guy who wrote the code, not necessarily the people who used the code, which is really bizarre and backwards, and its own privacy concern right there. But one of the things to keep in mind with Bitcoin is, yes, Bitcoin has quite a few decentralized mixers, including Join Market, which is a pretty awesome mixer from my understanding of it. And we are in Bitcoin actually already taking measures or taking steps on the development side to counter some of the issues that will be popping up in terms of tracing coins that run through mixers. One of the issues is that it's actually pretty easy to look at a transaction and figure out whether or not that has been touched by a mixing service. And ever since we implemented Taproot on Bitcoin back in November, I believe it was, that changed the signatures. And I don't want to get too technical, but it basically, Schnorr signatures allow different transactions, whether they're multi-sig, which is what you're looking at with a mixing transaction, is a multi-signature because it's a lot of people involved in it, a lot of people mixing their coins. You can actually obfuscate whether or not that has been using a multi-sig transaction or not. And it makes multi-sig look like a vanilla you to me kind of transaction, peer-to-peer transaction. So there are things that are being developed. It's not in place right now. We do have Schnorr signatures, but everything in Bitcoin, as I always say, moves very slowly. And they're still working on making the reality of privacy, of the privacy promise from Taproot on Bitcoin a reality, like making that a reality. So we've got quite a few things in the works that I think people can probably have some confidence in down the road. Yeah.
Well, of course, speaking of schnorring, I think we have to cut to a break, but we'll all return and we'll discuss the upcoming week right after this.
Hi, I'm Christine Lee, host of First Mover and all about Bitcoin. You're watching CoinDesk TV.
And of course, it's the Red Sea or Sea of Red out there. Bitcoin right now is trading at $21,247. That means it's down 0.6% in the past hour alone and exactly 9% in the past 24 hours. And unless maybe there might be something better going on next week, I don't know. But let's take a look now. We'll ask our panel at the week ahead. Brad, where do you see Bitcoin headed?
Well, obviously the big question here after this big sell-off and 6-day losing streak is where do we stop, right? I mean, nobody's looking up right now. People are just wondering where we're going to stop. And this $22,000 level had been seen as a pretty key level based on the technical charts. And now that we're below that, people are looking down. Whether that is 20,000, that's probably the next point that people would be looking at, kind of the psychological threshold around that level,
Sounds
from
like
a price standpoint.
Yeah, it sounds like Bitcoin has fallen to a hole. And speaking of hole, Jackson Hole. We got that conference coming up next week. Any thoughts on what we should look out for or what to expect?
Well, our economics reporter, Helene Braun, has a really good story out today. And it just makes the point that, the Fed is just using every single opportunity it has to kind of condition markets. And it's just, the all of what we're seeing in the markets on any given day is just they're trying to dial in collectively what people see in the future. And of course, and her story makes a great case of, what they map out for that future never ends up happening. And so, I expect more of the same next week. Powell, it's not a meeting. It's just like an academic conference. It's a chance for them all to get together out in, Grand Teton National Park, and it's really nice weather and it's really pretty out there. But the only thing that really happens, generally speaking, is the chair of the Federal Reserve gives a speech, and they'll use that speech to basically condition expectations for the September meeting, which just means it's just another day of conditioning the market. So, and lately they've been kind of pushing to make sure people realize they're still going to be pretty aggressive on risky assets.
How about you, Christy? What are you looking at?
Well, to sort of go back to what we were talking about with Riot last week, it was, as we said last month, turning off machines, and there's been a lot of downturn for the miners in the market. There's been impairment charges, and other companies have had to restructure their debt, and we knew that all this was going to shake out. But having said that, the hash rate for Bitcoin is actually getting back up to its all-time high. We are seeing miners still mining and doing their thing, and the blocks are being mined at a very reasonable rate. We had the difficulty adjust ups for the second adjustment period in a row, so that's been pretty good. What we are also seeing is that, Riot managed to also get its hash rate up, even though it turned stuff off. It still has 44,720 miners with a hash rate capacity of 4.4 exahashes per second. So it's actually on pace to pretty much go with the hash rate growth guidance that it set for itself at the first quarter of the year. So that's everything is going on track. So I think what will be interesting is to see what happens with the other miners and how they are going to sort of come out of the summer. We're reaching the end of the summer, and the electricity costs are going to obviously go in different directions. So it'll be interesting to see where the hash rate starts to go.
Well, we'll keep an eye on that, certainly. Thank you both. That was CoinDesk Week in Review panel with Managing Editor of Technology, Christy Harkin, and Managing Editor of Markets, Brad Cowan. And here are some of the other top stories in crypto in just 60 seconds. As recent market turbulence lingers, over $600 million has been liquidated in the crypto markets in the past 24 hours, according to data from CoinGlass. Meanwhile, Celsius now likely has money to fund its operations until the end of the year, according to the crypto lender's CFO. During a bankruptcy hearing call with creditors, executives said the company will receive additional funds from maturing loans, sales, and will use some tax savings. Celsius had previously estimated it would run out of cash by the end of October. So it looks like they bought themselves a couple of months, or at least have a couple of months more than they thought. Meanwhile, the FDIC has ordered FTX, US, and 4 other companies to cease and desist, quote, misleading, unquote, consumers. According to the agency, the 5 companies, quote, made false representations, end quote, suggesting crypto products might be FDIC insured. Nicholas Day is following this developing story. Please watch for it on CoinDesk.com. That's all about Bitcoin. I'm Lawrence Lewitton. I'm Amantaj Singh, and I will see you Monday morning for First Mover at 9 a.m. Eastern Time. Have a great weekend, everyone. Enjoy it. Take some time off, but keep an eye on the market. You're watching CoinDesk TV.